Hello friends, in the series on the income tax cases, today we will discuss the case of Deputy Commissioner of Income Tax versus NARSINGH ISPAT Limited. This case has been reported in 106 ITR Tribunal page number 453 and the matter has been decided by KOLKATA ITAT. This case has been decided on 26th July 2023 and this case is regarding Section 68 addition. In this case, a very brief point was concluded by the ITAT that in making the addition under Section 68, if the assessing officer makes the point that the directors of the share applicants did not comply with the summons under Section 131 personally, or in other words, they did not present personally before the assessing officer but submitted all the documents, then non-appearance of the directors of the share applicants cannot be made the sole ground for making the additions. This is the crux of this case. In this case, the Assessee was a private limited company. The Assessee is a limited company, and in this company, the two share subscribers H and S made investments in the form of equity shares. During the assessment proceedings, the assessing officers directed the assessee to produce the directors of the share applicants and the various documents. The assessee accordingly requested the share applicants to produce the various documents like bank statements, balance sheet, computation of income, return copy, their contact numbers, and the assessing officer issued summons under Section 131 to the share applicants. The share applicants of the assessee company submitted all the documents like bank statements, balance sheet, their contact numbers, their return copy, which were sufficient to prove the genuineness of the transactions, identity of the share applicants and the credit worthiness of the shareholders. But the assessing officer, by saying that since the directors of the share applicants are not presented before him, so he turned out the transactions as sham. It was the point of the assessing officer that the share applicants do not have the regular business with the assessee, so there was no reason for the share applicants to invest in the assessee company. This was the submission of the assessing officer. But the assessee was saying that since the assessee has submitted all the documents and the directors of the share applicants cannot be compelled by the assessee to present before the assessing officer, so only on this basis the addition should not be made. CIT appeal gave relief to the assessee and this matter came to the ITAT because it was the appeal of the department before the ITAT. The ITAT held that in this case there were two shareholders. One was H. The amount which H has invested into the assessee company was already added into the income of H. So the same amount cannot be added again into the income of the assessee under Section 68. This was regarding the investment made by H into the assessee company. And as far as the investment made by S company into the assessee company was concerned, the S shareholder also received share capital in the previous years and that amount was invested by the share applicant into the assessee company, and the share applicant also produced their assessment orders over a period of time. There were more than one assessment orders for the previous years which were presented before the assessing officer. So ITAT was of the view that the assessee was also having huge turnover and having net profit, so the purpose of making the investment into the assessee company was justified and there is no case for making the addition under Section 68 just because of the reason that the directors of the share applicants were not personally present in compliance with the notice under Section 131. At the end of this video, once again, I am repeating the name of the case. The name of the case is Deputy Commissioner of Income Tax versus NARSINGH ISPAT Limited, and this case has been reported in 106 ITR Tribunal at page number 453. The matter has been decided by KOLKATA ITAT and the date of the judgment is 26th July 2023. Thank you, friends.